joining Sanil and Ashutosh. We could get started.
Hi.
स्टार्टअप्स का ये कल्चर देश के दूर दराज तक पहुंचे, इसके लिए 16 जनवरी को अब नेशनल स्टार्टअप डे के रूप में मनाने का फैसला भी किया गया है।
A resilient nation is only built when billions of dreams across every corner of the nation are nurtured. When every idea and aspiration gets wings to fly. When everyone plays a role in building one of the most promising economies of the world. Startup India was founded 7 years back in 2016 by our Honorable Prime Minister Shri Modi and propel it towards becoming one of the largest innovation ecosystem in the world. Today, India is one of the fastest growing startup ecosystems in the world. We are adding highest number of startups every day in the world. From 8 unicorns in 2016 to 108 unicorns today, we have emerged as the world's third largest unicorn nation. All of this has been possible through the impact of over 54 regulatory reforms that Startup India has brought about since 2016 to increase the ease of doing business, ease of raising investments and reduce compliance burden.
When government takes a responsibility of something, it takes proper care that it reaches every nook and corner of the country. So Startup India has been playing and will be playing a major role in the growth story of our country. And very soon, India will not only be seen as the largest consumer market, but also as the largest producer market of the world.
From 4 state policies in 2016, today we have 31 states and UTs with dedicated startup policies, spreading the reach of entrepreneurship to 663 districts.
I believe it's a great success for Startup India mission, and we have seen like people coming from different background and financial situation. All these schemes made the dream get closer to the reality, and it's been a great journey with Startup India.
We have grown immensely from 446 to 87,000 plus DPIIT recognized startups across 56 industries, employing over 8.48 lakh people.
Last 7 years have seen an exponential growth in the number of startups and in the different kind of startups that are coming out in India. This is all possible due to the last 7 years journey of Startup India thinking about policies in a wholesome manner.
Various initiatives by Startup India have enabled this momentous growth, including National Startup Awards, States Startup Ranking Framework, Seed Fund Scheme and the Government E-Marketplace or GEM.
Startup India has actually created a very good systems and processes for adoption of such technologies into government ecosystem. That's really helped us tremendously. And the platforms like GEM, the government e-marketplace, they have specific areas where startups can sell their product to government ecosystems.
This incredible journey spanning over 7 years has transformed India through its zeal for entrepreneurship and innovation. This is only the beginning of our journey to a more innovative and inclusive idea. A nation of not just job seekers, but also job creators. Start innovations. Start dreams. Start aspirations. Start hope. Start opportunities. Start possibilities. Start the future. Startup India.
A very good afternoon, everyone. I would like to welcome you all to the celebratory week of the National Startup Day. Thank you for joining us for this webinar on channelizing private investments into startups. I hope this webinar benefits entrepreneurs who are watching us or even aspiring entrepreneurs who have a plan in mind and they've envisioned it. My name is Anayat and I work with Startup India and I will be moderating this space today. So this webinar will focus on different categories of investors in the startup ecosystem and what they look for while investing in startups. We've been joined by enablers of the ecosystem across places such as banks, debt funds, PropTech funds, as well as an accelerator to discuss the same. So before we begin with this panel discussion, I would like to quickly introduce our four esteemed speakers with a brief introduction. Our first panelist here, Ms. Apoorva Sharma, is a partner at Stride Ventures. Her role at the fund includes fundraising, investor relations, deal sourcing, underwriting, and handling strategic partnerships with VCs and banks. Over her tenure at the fund, Purva has led deals across sectors such as fintech, customer, B2B commerce, and health tech. Apoorva started her career with HSBC in their investment banking division, where she was involved in debt capital markets and was part of a successful bond insurances. Um, Post HSBC, she worked at Zenta Finance, a sector agnostic NBFC, where she was involved in deal sourcing, underwriting, and structuring. Our second panelist here is Mr. Sanil Sachar. Yeah, he's the co-founder and partner of Huddle, an entrepreneur, active angel investor, national best-selling author, and columnist based in Delhi, India. As part of the Accelerator, Huddle Sanil works with the portfolio to attain the short and long term, keenly focusing on the revenue strategy and growth. He's also one of the co-founders of the global sports apparel brand True, and looks in the global strategy and the multi-sports growth of True Socks in India. A sector agnostic investor, his portfolio consists of sports, media, arts, deep tech, and consumer good companies, to name a few, whom he provides early stage funding and strategic support to. A third panelist here is Mr. Ashutosh. Ashutosh is the head of digital and innovation at HDFC Capital. HDFC Capital is a for profit global impact platform to sustainably address the needs of the affordable or social housing ecosystem for all stakeholders through a combination of knowledge accumulation, innovative financing, partnerships, sustainability, and technology. Before joining HDFC Capital, Ashutosh was a partner at Loomis Partners and managing partner of Supply Chain Labs, which is an accelerator and a fund investing in technology startups. Ashutosh has over 16 years of experience in managing end-to-end process, that's investment, portfolio management, and exit of investment, as well as working very closely with the portfolio companies, helping them with strategy, go-to-market, fundraising, and financial aspects. Our fourth and final panelist today is Mr. K. Sampath Kumar. He is a seasoned banker with rich experience of more than 32 years in various capacities in State Bank of India. He joined SBI in 1990 as a probationary officer. He's been exposed to foreign exchange, SME, retail business, transaction banking, and corporate credit. He currently occupies the position of CGM at SBI Corporate Center, Mumbai, responsible for the SME loan portfolio of around 3 lakh crores of the bank. Dear speakers, I'm grateful to you for taking out your time from your busy schedules and being with us here today. And as I was reading your bios, I was only impressed by the experience and knowledge you bring to the platform today. So thank you for
Well,
joining
thanks a
us.
lot, Anat, especially on a Sunday,
Yeah.
Thank you for
Sunday
having
afternoon.
us.
I hope we'll be able to do justice to the Sunday afternoon.
Definitely, I'm very certain of that. And so we have, four speakers here today, and we have a lot of questions, a set of questions actually for each of them. So what we'll do is we'll go one by one with one or two questions for each, and towards the end we'll have some open-ended questions. So actually, we would also request the audience who are watching us, in case you're watching us on any of these social media platforms, do write in your questions. We will try to cover some questions towards the end of the webinar as much as we can in this 1 hour. So maybe we could go in the order of I could start with Sanil, Ashutosh, Apoorva, and Sampath sir. So my first question to Sanil here is, since you've been working with the accelerator and at Startup India also, we work with a lot of incubators and accelerator across the length and breadth of India, supporting them with some network connections or with seed funding as well. So, I want to hear from you. What is the process an accelerator follows in choosing startups it invests in? And my second question is actually, what should a startup, on the other hand, be looking out for when they are choosing an accelerator? and investors in their early journey?
Yeah. No, thanks for that, Nayat, and again, thank you for having us. It's really encouraging what Startup India is doing. I'm sure over the last many years of Startup India's initiatives, there's a reason why we almost have 9 lakh people employed, as we were seeing through startups, and this is just the beginning, right? With good players like Apoorva, Ashutosh, and many others. I think we'll try and be of any help. Let me just start with that. And we get a lot of help from Startup India as well as our founders in building the ecosystem. Now, coming to your first question, where what an accelerator looks at when we're trying to back founders in early stage ventures, the first and foremost part of an accelerator's role is making a startup recognize that it's not only capital and not just fundraising that is a part of your growth journey. So being an accelerator or a supportive investor is actually making your startups recognize that the capital is one path of their growth, and there are different parts of capital, right? You can raise equity, you can raise debt, you can raise revenue based financing. So capital has different definitions from a monetary standpoint. The second is capital has different definitions about the kind of intellectual capital you can get, which is mentorship, social capital, which you can get, which is the right kind of infrastructure to build your product, to distribute your product, and everything that comes in between. So the accelerator's role is really trying to make sense of the chaos that could take place. The accelerator's role is to be able to guide the founders in figuring out and letting them make mistakes. I think letting a founder make mistakes is a very large part of their growth, but helping them overcome that is important. The third bit is being a part of the journey before they're thinking of raising capital. So if raising your first round is categorized as level one, be a part of that zero journey. And fourthly, and I'll go on to your second question, so I can also hear and learn from my peers on this panel, is in the accelerator's journey, it's also playing the role of a person who can do financial diligence, right? We've heard many stories about ventures succeeding, and there are more failures, right? The failures typically happen because a learning curve is a large part of when a venture could succeed or could fail. And being a part of that learning curve in helping them by helping them get the right kind of experts on board is critical to the growth. And then, of course, we play the role of an investor anywhere from the first to the third round. And now comes the second question that you had, Inayat, which is how should a startup be viewing the accelerator? That's a simpler question to answer. I think first and foremost, I say this at every public forum I have the privilege of being a part of. I think the startup ecosystem has to recognize that the startups are more important than the investors. I'm saying this out loud again and again because a startup needs to vet the investor more, if not as much as how much the accelerator or an investor vets the startup. Because this relationship, the moment capital is exchanged, moment you're on one capital structure or cap table, is like you're building a family. So it's a very long partnership. I'm saying this as having been an operator on the other side and now having the privilege of building many ventures with my founders. You have to, as a startup, evaluate who you're going to be getting investment from. How you can do that is very easy. Talk to their previous portfolio or talk to their current portfolio. Understand why they are relevant for you, not because they can only give you capital, but your support. And lastly, try and talk beyond work with who you're going to be choosing as your accelerator, your investor, so that you have a cultural alignment with them. The reason I bring this up is most of the work in building a business is done outside work. And that is exactly why you have to be able to build a relationship that is beyond finance with whoever you choose as your investor. So I'll pause there, Nayat, and thanks for the questions.
Noted. Thank you. I think love the emphasis that startup is much more important and how it's important for them to fail and learn, but just be there to guide them so that they're able to make learning and sense of it for themselves. So thanks for that. I'll move on to surface some questions to Mr. Ashutosh. So Ashutosh, what is the motivation for institutions, perhaps like yours, to channelize investments into startups? And then I could go on to my next question.
No, of course. Thanks a lot, Inayat, for this platform, and a very, very hearty congratulations to Startup India and Invest India for doing this great work for the last 7 years. I have been interacting with Startup India for close to 5 years out of those seven. I must say that the kind of work that Invest India and Startup India is doing is really awesome, right? Let's say from 500 startups to more than 80,000 startups registered. This is a great achievement, right? If imagine Invest India was an investable startup, I guess many of the investors here would be lining up to invest in Invest India itself, right? But coming to the question itself, right? So I represent HDFC Capital. Just a quick background about HDFC Capital before I address the question, right? So HDFC Capital is essentially a platform for investments, which is driving investments in residential real estate, right? Particularly in the affordable and mid-income housing segment, right? We realized that this is about 6-7 years back, we realized that this is a very, very ignored area where not a lot of focus is being given. But at the same time, there are a lot of regulatory changes and government emphasis that was coming up, right? So regulatory changes in terms of RERA being instituted, GST being institutionalized, and a focus on getting the unsold inventory sold, right? And then essentially there was a lot of investor focus. So us and a few other institutions like Mr. Sampath Kumar's institution, SBI, also started pushing, how this segment can emerge, right? And that is what we have stood for over the last 6-7 years. Also, we have started focusing a lot on adoption of technology, right? And that is what I and my team members actually try to evangelize in this segment. Now, coming to the question about what do organizations or large institutions look at? See, I mean, there are different kinds of institutions who have different priorities, first of all. But if you look at certain common factors, one of the biggest things that drive institutions to look for investments or partnership with startups is because they are trying to see what all core innovations are happening in the ecosystem and try to gain knowledge from there, right? A large institution, for all facts and purposes, has a certain way in which it functions and actually drives the market in many of the cases, right? But there are various ways in which the core can be expanded, right? So new customer segments can be targeted, as an example. New ways in which the same customer can consume the services or satisfy their needs. There can be new technology interventions that fundamentally change the need of the customer as well in that particular area, right? And these are some of the innovations that are best suited to be enabled by certain startups because they function as if their life depends on it, right? And that is what a large organization likes, because they are able to see the through and through the full life cycle of how certain things are getting evolved when they closely work with startups, right? And this you will see in almost all the large organizations, this being one of the primary motivations of why they want to work with the startups, right? The second big aspect is obviously the financial gains, because the finance department or even the corporate VC department obviously wants to see a certain return on investments that they have to generate, and startups in particularly in the last decade or so have actually delivered that kind of a returns to the investors, right? So that is what they are looking at. I would say I would limit myself to these two. There are other factors as well, but I would limit myself to these two.
Yes, Ashutosh, and we acknowledge the long-term partnership Startup India has had with you. I think even before you were there in HDSC. So acknowledge your contribution to this ecosystem. My other question was actually about the very specific mandate of HDSC. Is there a mandate to invest by HDSC Capital? And you also launched the Tech Innovators Program recently in partnership with Startup India. So what's been the response over there?
No, thanks a lot. Very exciting times. A few months back, essentially, Tech Innovators Program is a part of the Heart platform that we launched in 2019. The Heart actually stands for HDFC Real Estate and Technology Ecosystem. It is a platform to nurture, to give support to the startups and other institutions who are coming up with their technology to basically change how the real estate, particularly residential real estate industry, is functioning. Right now, Tech Innovators Challenge. Essentially, we launched this year in active partnership with Startup India, and also it was supported by leading stakeholders like some of the biggest VC funds, Sequoia, Axel, Bloom, Alteria, and a few others. Also by some of the large organizations, academic organizations like IIM Ahmedabad and IIT Kanpur, and a few others. The response was tremendous. Inayat, I must tell you, we got more than 500 plus applications in an area where people think that not many, PropTech is an area where people think not many startups exist, right? And more importantly, the way in which we came across some of these startups functioning basically changed our outlook, right? So some of the startups have come up with really good offerings, which, if adopted by the ecosystem, can change. And we, along with our other partners, want to be the flag bearers of these startups. So the response has been tremendous, and we look forward to having these startups participate in these journeys. Now, coming to the evaluation criteria, which was asked by you, and which was a very big part of what this Tech Innovators Challenge was, right? So, couple of things very quickly. We generally evaluate whether the founder has the right kind of a passion and the background to operate, particularly in real estate, because that background and the passion are the two biggest factors which make or break, or which ensure that the startups actually reach the kind of journey which the investors are looking at, right? The second big factor that we look at is the kind of solution and how it can be adopted, right? And one of the advantages that we have is that we have that kind of ecosystem where we can quickly test the solution and figure out whether it has the right set of attributes for adoption or not, right? So we quickly do that kind of a diligence, small diligence, and that is one big factor. There are a few other factors, but I'll stop myself here. Very happy to be working in an organization which is leading these initiatives.
Noted. Thank you. My next question is actually to Ms. Apoorva. Thank you for joining us here. Since you come from venture debt uh, background, wanted to understand how is the demand for venture debt looking like in 2023 for Indian startups, and in the current macroeconomic conditions. What is your advice to your portfolio companies? What are you recommending to them now?
Sure. So, first of all, thank you so much, Inayat, for having us here, and congratulations to the commendable achievements that Startup India has had so far, and all the best for your future endeavors. So, venture debt, there has been a lot of awareness, education about how to use debt, and a lot of VC ecosystem players and founders are now very well aware of when to use debt, how much debt, and things like that. So, venture debt has gained a lot of popularity, especially over the last 3 to 4 years. Last year, when I say last year, I mean calendar year 2021, the full year deployment was about 600 million, which went as high as close to $1 billion in 2022. And we expect that to raise significantly in this year as well. One small caveat I'd definitely like to attach, that venture debt and venture capital are a very married asset class. So although venture capital, the annual deployment in venture capital last year was lower than what it was in 2021. So I think 2021 was about 40 billion and 2022 was about 26, 27 billion in total. But still, although the venture capital annual deployment decreased, venture debt annual deployment increased in the last calendar year of 2022. I still think that 2023 also venture debt will definitely increase, but it has to be supported by a bouncing back of venture capital investment because it's a correlated asset class in that sense. So it will definitely increase, but as all of us are expecting that H2 of 2023 should be better in terms of investor sentiment. If that happens, then it will increase faster than it would otherwise. So definitely I think the ecosystem is far more mature now to handle an asset class like venture debt. To answer the second aspect of your question, Inayat, in terms of guidance to our portfolio companies, I think founders are also well aware that the next 6 to 8 months, so probably the next 3 quarters, is going to be slightly challenging because of just the general macroeconomic factors. And there is no special premium for growth. So even if you're growing at a 10% month on month, it's fine. Even if you're slightly flattish, I think that is also fine. What is important is survival. So optimizing performance marketing, not taking unnecessary expenses, not experimenting at this point in time is what I'd recommend to my portfolio companies.
Thank you. I'm personally curious about any reasons for venture capital going down, but venture debt coming up. Is there a particular reason or just a trend that we're noticing?
So in I generally, venture debt has been about 3% of the venture capital inflows in the ecosystem for India. This percentage is much higher for economies like the US and Europe, where venture debt has been existing for far more time. Right, it has been existing for 25 years in US, and there it's a much more mature asset class in that sense. And venture debt is about 15 to 20% of the venture capital money. In India, it is still underpenetrated. There are a couple of players. The market is still about 3% of the venture capital ecosystem. So there is room for growth. So one, I would attribute to that. And second, that earlier, second is also awareness, right? A lot of late stage companies, if you look at Series D, Series E stage, multi-billion-dollar kind of companies with zero debt. So they hadn't explored debt as part of their capital structure in any of their prior rounds. But now they are, given the valuation mismatch, they're trying to substitute some bit of their primary capital requirement with debt, and then they'll push off their primary equity raise to some point of time in future. So I think it's largely about awareness and the fact that India is still underpenetrated, so there is room for growth. That 3% can grow to say 5% in the next couple of years.
All right. Thank you. Thanks for the insights. Now we'll move on to our next panelist, Mr. Sampath. We have some questions for you as well. Would love to understand about any brief on the startups that SBI has financed so far. So if you can give your views on that. And second, would love to understand your views on DPIIT's credit guarantee scheme for startups, which was introduced recently.
Yeah, thank you. Congratulations, team Startup India. I hope my volume is okay. Yeah, congratulations,
Yes.
team Startup India. For this great initiative. This has come at the right moment, I would say. This is the time, whatever Silicon Valley witnessed some 20-30 years back, we are witnessing it in India. And we are also in a situation where there can be a flight in a sort of reverse movement in the capital, which had come from the West because of the firming up of interest rate in the West. There can be a reverse movement, which can create some sort of dislocation here for the units which have raised money from there. They need to be prepared for that. State Bank of India had been in this area without those jargons or terminologies. We have been, supporting companies, growing companies, which have, incubated technologies and which are on the forward movement, where some Series A investment has already come in, and the POC has been, tested, and they are on the growth path. That had been our initiative, and We also, as part of our uh, the treasury operations, we have a small money earmarked for private equity, where we have been supporting these sort of ventures which are in sunrise sectors, ventures which are using technology. And we, being a national bank, we are always conscious that employment is a very key thing for a country with a large population like India. And the startups are the ones which are going to create a lot of employment, make everybody self-employed, than depend upon the government or an MNC to support in employment. In this journey, we have recently opened two startup branches, one at Bangalore and another at Chennai. And we have been helping startups here. The Bangalore one is at Koramangala, and the Chennai one is at the IIT Incubation Center in Chennai. Uh, Even before that, in companies which have been, organizations which have been registered with DPIIT, which have been having the requirement, we have been supporting them, and it had been a very nice journey for us. We are able to help them, guide them, and we are able to give them whole bouquet of offerings. Uh, Particularly in areas like where they are trying to raise money from abroad. We have our SBI Capital Markets, which always supports, and we have huge number of foreign officers also help in showcasing these sort of ventures. And we have a mutual fund which helps them, in planning any whatever surplus liquidity which is there, how to plan that. And we have the whole lot of technology initiatives on the collections, the payments, how to scale it up. The most important thing is that SME financing had been in the blood of every state banker since ages. So whatever applies for SME financing, this applies with certain changes to the startups also. The key point is governance all through. With governance and commitments, all these units can scale up like anything. So I'll stop here on this particular topic. The other one is, you talked about credit guarantee scheme that had come at a very right time. Uh, right now, the startup financing is itself qualifies for priority sector lending, which is a great initiative by Government of India. It treats it very important, as important as the agricultural financing or MSME financing. So that encourages all the institutions to fund them. That is one point. Another thing is that the credit guarantee scheme, which has just been rolled out, is going to be of great support, where up to 10 crores credit guarantee is available for units. Earlier, it used to be up to 2 crores for MSME units. Now, for for startups, it is up to 10 crores, where you can wherever credit guarantee is there, the lender has the comfort of a fallback. It is not that these units can venture into very risky areas without any without any care. But the point is that the lender will have more comfort to go an extra mile and support this. There are three slabs into it, up to 3 crores of funding. 80% of the amount is covered. From 3 to 5 crores, with 70% of the amount, and above 5 crores, 65% of the amount. The cap is 10 crores. So quite a good number. The large number of units will be covered under this. This will be a big fillip. Particularly, I'll come to the first point. Now, capital is a little drying up in India, and there is a movement now. These units may look for debt, and at this point of time, bankers will be there to support them. All they need to do is that to show their governance, to show their commitment, and lenders will be there. So I'll stop there. I'll stop at this point and leave it to the other panelists.
Noted. That is our hope as well, that the scheme benefits maximum entrepreneurs there who are in need of this. So we have had questions from all panelists here, and now a set of questions are actually open to anyone. So you may unmute and share your perspective on that. So we would like to understand what are some key trends and sectors you're seeing becoming more and more relevant over the years. In from your personal experiences, you might have come across those in both professional and personal capacities.
I'll start with that and pass it over to the experts, Ashutosh, and Mr. Sampath. So I think at our end, the reason I wanted to start is I'm just going to say it from an accelerator, very early stage standpoint. Um, I think the next few years, and I don't want to put a definition of what few means, because definitely there's a lot of good sentiment on the next decade and more is India's, and I am completely in alignment with that because I believe what we're seeing most of trend, the macro trend is on enablers. Now, when I say enablers, I mean any sector where we can have the right kind of enablers, be it in the manufacturing ecosystem, be it in supply chain, be it across the right kind of enablers that will ensure us not to be just the market as we were. Again, I'm referring to the early video that was shown. We're not just going to be a market where we'll be the largest consumer market, but also the producing market as well. So there's a lot happening to enable production. There's a lot happening to enable the right kind of supply chain ecosystem, and there will be a lot more brands being built in India for the globe. This is a very large part. So if I had to sum it up, enablers is one side of it, and the direct correlation to that is there will be a lot more global brands being built from India. That's something we're very bullish about because manufacturing will give us better unit economics. We already have a great set of entrepreneurs who have become second, third generation entrepreneurs now. So the ecosystem is very refined. And there have been enough mistakes made for us to have a playbook of what we should be doing and shouldn't be doing. So that is one area. And I think the last trend that I'm seeing is, something that also the kind of insight that, Apoorva was giving, it's very correlated, right? Venture debt, equity, where there's a lot more communication between investors. There's a lot of collaboration that is taking place. More collaboration maybe that took place in when the first VCs of the country came in, because at that time, sure, we all acknowledge competition, but healthy competition is now there, right? So you're collaborating a lot more. I can say that because I've had great conversations. One of our fellow panelists, Ashutosh, and we've learned a lot together, right? And you collaborate, and therefore you're building not only your venture but also your competing ventures through these combinations and conversations.
No, very well said, Sanil. There is a lot of macro headwinds that are coming in, right? And my two bits on that, just in terms of, first of all, statistics, right? In the last 10 years, India has grown to now become almost a $5 trillion economy. It is the fifth largest economy in the whole world, right? And still exhibiting high percentage rate growth rates, which and with a very healthy working mix in terms of age demographics that is in its favor, right? Now, in terms of startup ecosystem, as once again rightly said by Sanil and highlighted by Inayat, Apoorva, and Sampath, there are enough and more enough and more focused effort is actually going towards supporting these startups. So close to 80,000 plus startups, even in my area of interest, which is the whole PropTech and FinTech space. PropTech has close to 1,000 startups. FinTech has another 10,000, 11,000 startups. So there is the trend is towards adoption of various technologies and solutions which can fundamentally change the way things are working right now, right? So particularly in, let's say, real estate tech area, what we foresee and we want to be a flag bearer is how some of the usual things are happening, right? I'll take a few examples, right? One or two examples, right? So for example, just in project monitoring or construction work monitoring, till 5 years back, right, there was absolute manual effort that was going on in terms of figuring out, okay, at what stage each of the on-site construction monitoring or construction progress is happening, and all the reporting used to be through Excels and mails and so on and so forth. In the last 3 years, just in that shorter time frame, there has been a big adoption of drone technology. The government itself has come out with multiple guidances on how the drones and what is the airspace in which they should move. And things are very, very clear now. So much so that almost all the tier A plus kind of developers that we usually work with, they are 100% dependent on drones to monitor their construction progress, which was not there even 5 years back, right? So imagine the kind of shift that that particular small change has evangelized. And I can keep on going into various directions, but a big macro trend that at least we are seeing is the adoption of technology in areas which were completely manually dependent earlier.
I'd just like to add, already Sanil and Ashutosh have mentioned how platforms that enable trade, enable business are gaining so much traction. Of course, I think financial services has been the area where India has had the maximum innovation. I think definitely India is the front runner in different aspects of financial innovation. There are so many wealth tech platforms, neo banking platforms, BNPL platforms. Of course, it has certain RBI overhang which needs to be sorted, right since inception. But just in general, the innovation across different areas of financial services is tremendous. I mean, so many countries would be behind India. When you gauge that everybody is making payments through a UPI, whether it's an auto driver and of course taxi aggregators, and every place is accepting UPI payments, which is a lot of us don't carry cash anymore in our wallets. I don't for a very long time now. So I think financial services definitely, and also consumer. I mean, there are companies like Mensa uh, who have replicated the Thrasio model out of US, who enable smaller consumer profitable brands to manage their working capital cycle better, their inventory planning, their marketing, etc. And they're enabling them to scale more. Brands who did not have access to private market capital. So I think across sectors there's a lot of innovation, and it will keep happening. And India is definitely the third largest startup economy globally, and will contribute significant portion to the GDP in coming years.
Yeah, to take this forward, nice examples given by Sunil, Mr. Mayank, and Apoorva. Now, what we find is that even the regulator, the Reserve Bank of India, is wedded so much to technology and startups that there is one platform called Trades where MSMEs can just go there, showcase their invoice, and the banks will bid for their invoices at a very low rate. Where can we find such a system? It has been rolled out, and 3 startups have enrolled, and they've been found fit. And the Trades platform is, price discovery for MSMEs, where on the one side there is an anchor who has to pay, and the MSMEs have raised the invoices, and the bankers are just pushing each other in funding them. This is one great example of technology, and this is part of the supply chain. So supply chain is one area where huge changes are happening, where movement of goods are getting tracked through technology, bottlenecks are getting removed, and delivery at the quickest possible time. This is one space where we find a lot of traction. EV is another space where we have found a lot of traction, a lot of entrepreneurs getting into it, into the EV support system, be it charging stations, be it making ancillary equipment for EVs. Then solar panels is another attractive area. Medical equipments, the defense, smaller defense equipment and aerospace equipment, UAV as mentioned by Mayank. We have recently signed up with one particular unit in Chennai, where technology is used to clear sewage, which has been done manually, which is a very difficult job. So technology is used to clear the sewage and make it, smooth. Again, the medical treatment is one area where this technology can be used in a big way. So these are all getting into very revolutionary areas, and if we keep encouraging them, if we give them the right input, if we give them the right support, they can take the existing ecosystem to a very high level. And we are very proud and we are very happy to be part of this journey. And I'll be feeling in my duty to mention two other supports. One is that there is one SRA fund created by Government of India, which is playing a big role in making money available to this one. And SB Cap Ventures is one of the managers. SIBI is also doing a great job in this sphere. So the entire ecosystem, private sector, public sector, directly the government, the regulator, all of them have come together in supporting this. This is a very unique phenomena which needs to be capitalized. The tempo needs to be kept alive so that our startup move to the next level. Thank you.
Noted. I think we touched upon mainly technology as a very important enabler, be it in terms of the sectors we're going into or technology being used to do existing things such as in healthcare, or like you talked about drones being used in PropTech, or say something like sewage treatments. So yes, we do see that as an emerging trend. To the questions surfaced by the audience in the chat box, I think one is about if the session would be available, recording would be available. Yes, you must check the recording and all the platforms later. Other question actually we're seeing in continuation to the trends we're expecting in the years to come is actually on the lines of the sectors. So there are questions asked on innovation in agriculture. So how can investors and organizations like these help in those? Then we also have question on the lines of not just a sector as in agriculture, but also sectors in rural areas, in tier 2, tier 3 cities and further. So how does investment look like in those areas? Are we going to see any particular change? How has the scenario been so far?
So I can start for agri-tech. So I think agriculture as a sector, it was not a very favorite, generalist VC space. So earlier funds like Omnivore, etc., came up with special focus because there's a lot of work that needs to be done at the grassroots level, and a lot of things which you cannot really understand unless you have been on the ground. But now I see over the last 5 years, agri-tech has really blossomed, and there is so much interest from all kinds of generalist VCs, global investors. So it's not a niche asset class anymore. And similarly, when Mr. Sampath was highlighting about EV, it also started as a very clean tech focused fund, karega usme kuch, but now it is so widespread. All VCs are interested, all private equity guys are interested. There's so much capital. So agriculture also has seen its, I think, full decade. Still, a lot of focus remains on the market linkage part. That how can you procure better from farmers and FPOs and provide it to the local kirana stores, horeca, other B2B food manufacturers, etc. So how do you reduce the middleman, and in that process also make sure that the supply chain is more efficient, there is less wastage, there's better price for the farmer, and things like that. So all of that is happening, I think, in a huge proportion on the market linkage bit. On the input side, I think that the magnanimity is much lesser because market linkage is probably easier to establish. Input side is a more tougher problem to solve. On how can you help them with soil testing, how can you help them with weather monitoring, how can you give them better seeds to increase their yield and hence their income generated out of that crop cycle. So a lot of work is now going there as well. And of course, other areas like drone technology, how to make sure that the pesticide distribution, fertilizer, etc., is less manual. There are more autonomous refined agricultural equipments which are not very manual intensive. So there's a lot of work that is going across the spectrum of agriculture. We are invested in companies like Waycool, Gram Cover, etc., which are doing a lot of grassroots improvement at the agri-tech level.
And I'll take up the, thanks a lot, Apoorva. And I'll take up the question on tier 2 cities and how has been the response. Essentially, there is an inherent advantage that we are seeing when we talk to tier 2 startup founders, right? Because in the last 2-3 years, what has happened is that there has been a lot of migration of folks, smart folks, all different kinds of folks, from tier 1 cities to tier 2 cities and beyond. So much so that we are not surprised when we hear that a co-founder is actually based out of Surat, but his whole technologies team, all 15 people of them are sitting out of Bangalore, right? And he's perfectly comfortable in that kind of a scenario, actually developing that product, right? The other thing that we are seeing an emergence of tier 2 cities is coming once again from the real estate angle, is a lot of focus on development on these tier 2 cities, right? For example, even government has launched that smart cities, 100 smart cities program, right? And I went to Bhubaneswar a few months back, and I was there about 10 years ago. You see a night and day difference in terms of how just one typical city, Bhubaneswar, has emerged. Even though it was a capital, it was a small little town 10 years back, and now it is one of the smartest cities you would see, a cleanest city, right? So now what I want to say is that the standard of living in tier 2 cities is very, very comparable, and in many cases even better, right, than what it is in tier 1 cities. And a lot of focus is being given by some of the financiers like us, like Mr. Sampath, and few other institutions, to develop, let's say, housing and commercial projects out there. So tier 2 cities are emerging to be the hub, and I see a lot of movement and a lot of really good startups and founders coming out of tier 2 cities going forward.
Yeah, I would like to add two small points here. One is that agriculture being a little cattle-starved sector, where they cannot invest in high technology, tech aggregators play a they can play a very big role here. Like sharing of equipments, the tractors, or harvesting equipments. So there is a lot of scope there. It is yet to be, yet to be realized, yet to be explored. Definitely on seeding and using pesticides, the drones have been used, but the scope is very high here. Again, on the supply chain side, agriculture suffers because of supply chain issues, where you don't have warehousing, or you don't have very scientific or optimum storage and movement. So this also can be captured. There is some movement of entrepreneurs to this side, but maybe we need to think about it a little closely and devise something more on this one. So, and on tier 2 cities, I can recollect some 25 years back, State Bank of India launched a project upgradation, technology upgradation for pumps, motor pumps in Coimbatore. It was called Project Uptech. There was some support from the government. This fund, we identified new entrepreneurs, helped them in upgrading technology, created common infrastructure, common testing facilities, and this moved the pump industry in Coimbatore to the next level. Some of them have become, mini MNCs. This we could do it in between 85 to 90. So this sort of initiative, intervention, specific intervention, Tripur would not have been there what is today, but for State Bank of India and Government of India's initiative in the 70s. So a very targeted intervention can help tier 2 cities. We have seen, private equity guys, even Tata's venture funds have invested in certain units in Coimbatore. There is a lot of scope, and there is also a reverse movement of techies to tier 2 cities, to agriculture, to allied agriculture. Definitely, scope is definitely there, and we all need to work on this.
Yes, definitely. We all need to work on this to increase the geography we're supporting. We have time for one last question. We have 4 minutes, and we'd love to surface this particular one. So, somebody has stated that accessing capital markets still is a hurdle, as VC or angel funding is not a standardized process. So, how can startups best navigate this situation?
I'll start with that. So I think I have a slightly differing thought here. I think the access to investors is fairly easy because a lot of investors. So I'll start with the private investments, and I'll pass it over to those who can talk about their areas. The most important part I'll start with is for every entrepreneur, anyone, please don't shy away. Don't be ashamed of cold calling, cold messaging. So reach out to funds, reach out to investors, individuals. The first answer or the easiest thing is you'll never hear back, so they're not interested or they're not relevant. It saves you time actually for the future. The second thing is, a lot of investors, like I was mentioning, the hierarchy is startups first, investors second. Therefore, it is in the best interest of the investor to reply back to you. So use platforms like LinkedIn to reach out. If you're from a university, doesn't matter whichever university, speak to your peers and reach out to ecosystem enablers as well. So that's one part. It's very easy. You've got platforms like Angel List that have a list of angel investors mentioned. You've got platforms like Traction. I'm saying all of this because you all are going to be having this as a recording, so please use these platforms. Traction, where you can see investors, that you'll find great people like Stride Ventures, like HDFC Capital, like Huddle out there. The third bit is structure will keep growing, right? You've got the government creating the Atal Incubation Commission. You've got AICs out there, incubators and accelerators being created. Everything is a Google search away. So I don't believe that the structure is not there. What I do agree is that we need more forums, more platforms like this to create awareness. But reach out is my last point to everyone. The first answer you'll hear is a no, and the best answer you can hear is a yes.
No, absolutely. I completely agree with Sanil on this point. We thoroughly support the startup ecosystem in many ways. Actually, to relate to one of the things that Apoorva and Sanil said earlier, the startups are the hero of the story, right? We investors are you can say, the backers or the sideshows in the way tech startups are actually changing the ecosystem, right? So if a startup or great startup is coming to us and talking to us, it is our benefit, not just the startups. And that is how most of the good ecosystem partners like Huddle, like Mr. Sampath, like Stride Ventures, like Startup India actually think that we are fortunate if we can get great startups to back. Right, that is the fundamental thought that I want to leave in everyone's mind, because it's a recorded session. That do figure out how to reach out, because then you'll be doing these guys a favor. Now, preceding that is one more big thought, that what will make your startup great is something you'll have to first figure out before you reach out to any investor, right? You have to figure out what is it that makes your startup the biggest growth story that will follow in the next 2 years, 3 years, 5 years, right? You'll have to figure out what is the what is the kind of target segment that you have, what is the technology that you are going to bring to the table, what is the kind of intervention in terms of solution that you are going to make, which will lead to great adoption by the customers. You'll have to figure those pieces together, right, and make a great story backed by certain numbers, backed by certain early adoption and traction. And that is what will make your startup great, not pinging, let's say, hundreds of investors and hoping that one of them will fund you, right? Which I see that kind of mentality as well these days, because there are so many funding platforms. But that is the two advice that I would request. Figure out how to make your startup great, and then reach out to as many investors as you, or ecosystem partners that you can.
Aligned. Would be good to have startups working on the inner game, and then there are platforms that exist. And I hope this session serves as a point of information and awareness on various platforms you can go to, and the kind of investors and institutions you can reach out to get funding for your startup. And I would also like to add Startup India also as a portal where you can create a portfolio and a profile of yourself and reach out to these key stakeholders who can help you in this journey. So, all right, with these concluding lines, would love to conclude this session at this point in the interest of time right now. I would like to thank you all for bringing deep insights to this discussion. I personally loved moderating it. And we're actually grateful to you for not just being here with us today, but actually for doing what you do every day, that's supporting entrepreneurship when it needs the most. And looking forward to working more with you and building India and making it truly Atmanirbhar today. Thank you.
Thank you so much.